Hello, everybody, and welcome to Crypto Talks daily live show. We are back again. Like we promised yesterday, we were doing a bunch of TA and we were trying to figure out what to do today. So we thought, why not talk about something that is actually important at the moment? So we have decided to talk about the fact that DCG is in trouble and why that is. So basically, DCG is the I guess the big daddy of the space right now. They own the Grayscale Bitcoin Trust and other things, and yeah, they're in trouble. They have about $2 billion in liabilities right now.
Yes. So these are liabilities which come from their sort of partner company, which has got caught up in the 3 Arrows Capital and Luna collapse, and basically are now in a big financial hole. And DCG have basically put themselves on the hook for that debt and that repayment. So it's not looking good, because ultimately they need to either be able to finance that debt or take the loss, and to do that they need to have $2 billion of cash lying around, and
yeah, I think it's even
sounds of it,
2.2.
they just don't. Yeah, something along those lines.
Yeah,
it's big.
nasty.
It's big.
Yeah, the reason to why this happened, obviously 2022 was not a great year for any player in the space. I mean, after Luna and 3AC crashed, that big hole of $2.2 billion or something like that, that's called $2 billion, that was created. It's not easy for anyone to fill, and especially not with new dominoes continuing to fall afterwards. They were one of the first ones to go, I believe, after we saw the downturn. I mean, the Luna and 3AC thing, those were the two first ones kind of to go down.
But basically, it was well known that they had a debt, they were in trouble, and it just so happens that they have obviously the financial backing to tide them over. But as the markets continue to slide, the problem's not looking like it's gonna get better anytime soon.
No, unfortunately not. And we did find some articles. I'm actually gonna open up one of them right here. Let's see, so I do this correctly. Let's do it this way. So the Grayscale Bitcoin Trust discount is narrowing, right? It went down all the way to 48%, I believe it was. It was nearly 50. They're saying it right here. It was nearly 50%.
I think it was below 50% at some point. It was more than half price.
Right. According to this one here, it was down to 48. But I don't know how exact this one is. But it is funny because I purposefully used CoinDesk for the articles, because guess who owns CoinDesk? DCG.
Yeah, I didn't know this.
Yeah, they do. But yeah, it's been pretty bad. It went down to, I'm currently 38% discount. The GBTC, which is, by the way, for those who don't know, it's a Bitcoin fund that is propped up by or owned by Grayscale, who is in turn owned by DCG. And currently, if you want to buy one Bitcoin, you're gonna have to pay 17,400 something right now. And with the 38% discount, if you're buying this fund instead, you're paying 10.7K for one Bitcoin right now, as it stands with this sort of discount. The question is, imagine those people who were buying when it was 20% discount, and now it's
$9,900. It is. That's what you can buy a Bitcoin. Well, that's what you can buy a Bitcoin for. 9,900. Right. Well, you can buy a IOU 1 Bitcoin. That's the big difference is these GBTC funds, the shares, although they are fully backed 1-to-1 with a real Bitcoin, but they're not redeemable for Bitcoin. So yeah, for people wanting to know how the fund works, is there's a 2% management fee, and so if you're holding that Bitcoin, you are essentially paying 2% per year to them to hold Bitcoin, which you can't personally access. And this is one of the reasons why we've seen this discount growing, even during the bull market. This discount sort of developed and then continued to grow as basically as the space has developed and took an awful lot of growing in 2021, that there were alternative funds available that didn't come with these limitations, and so GBTC has just continued to bleed price relative to Bitcoin.
Yeah, it's been kind of crazy. I know there's a lot of traders out there and speculators and all these who are kind of picking up GBTC as like a hedge against Bitcoin somehow. And I mean, yeah, okay, if you believe that it will go back to where it should be, do your thing. I'm not touching it because I'd rather buy spot BTC. The
thing with it is a regulated product, so
right.
This isn't something where they can just do a runner and take your Bitcoin away. You
correct.
They do have the Bitcoin. If you have that product, you have it. And in theory, over time, yes, this gap should narrow. It should come back to one.
Right.
It's a case of how much you're prepared to wait for that to happen. You've got an opportunity to kind of buy twice as much Bitcoin, but how do you know the gap won't worsen? How do you know it won't take years to recover? And with those extra fees and stipulations, people just choose to buy the Bitcoin.
Yeah, and I mean,
especially after this year and the horrendous state of blow-ups all through 2022.
I mean,
self-custody is king.
What happens? This is why I would rather buy spot BTC, because then I know I have it in my own wallet, right? And what's to say that what happens if DCG goes down, right? They will have to liquidate or whatever it might be. But the thing is as well, they have filed to convert the GBTC fund into an ETF, which is an exchange funded or exchange traded fund, which means that once that happens, if that's, the SEC has been rejecting this several times, and the last time they did, Grayscale actually sued the SEC for denying it on various grounds. But it's like, if they would do this, that means that it becomes a spot BTC backed ETF, essentially, and that means that the arbitrageurs will come in, and that should close the gap, right? Or the discount, right?
Yeah.
And so my little question in this scenario here is like, why is the SEC denying this? Are they doing it to hurt the market, like the crypto market, or are they just, you know what I mean?
One way or another, they are hurting the market because they the fairness of something like Grayscale to I think they have a very valid claim that they have been applying for this for years. They have followed all the advice, they've done what they can. This is a legit fund. It's an exchange. It's already an exchange traded product. It is a listed product, and so we have futures ETFs. Somehow we managed to get a futures ETF before a spot ETF, and
crazy.
What have we've already seen the effect that leverage has in this market, and it isn't positive. And it honestly looks to me, not wanting to be accusatory, but it really does look as if this is an opportunity to suppress the price of Bitcoin. And we know these accusations of price suppression in futures markets it's not a conspiracy theory. This is fact. You can see it in the gold market, where the futures market vastly outsizes the physical market, and Bitcoin unfortunately is going the same way. And it is an absolute fact that it will suppress the price by having people trade paper Bitcoin instead of the real thing. the Grayscale are really trying to encourage the real thing. You know, let's go and actually have this and own the Bitcoin. And the SEC have a lot to answer for in this regard, because a lot of what's happened this year, from 3 Hours Capital to Luna to FTX, all of this is a result of lack of regulation, lack of oversight, lack of really, one, taking this seriously, and B, just being so ill educated on the space and what's happening. Because regardless, the SEC have a responsibility to the public. Apparently,
their job is to protect the investor, right? That's the whole point of the SEC. And the messed up thing here for me is that they're denying this. They've been denying it. Obviously, I think they've done it like 4 or 5 times, or maybe even 6 times, where they tried to get this ETF going, and the SEC has denied and denied and denied. And now we see this whole thing where SBF, for example, where SBF was basically talking to Gary Gensler. I'm not going to say on a daily basis, but regularly. And they're like, it's starting to smell really bad around Gary Gensler. Like, I'm sorry. I will say this though. I watched his course, MIT course, on blockchain, and he's a great teacher. He knows what he's talking about. He's not an idiot. So that's also one of the big reasons to why I'm feeling that weird smell around him right now. I'm like,
that takes ignorance out of the question
exactly. And that's why it smells so bad. That's why it smells so
absolutely.
bad.
And it's look as a really good example is here in the UK, the UK government banned futures trading. Yeah, I'm not allowed to sign up on Binance with a UK account and trade futures. Now, that was done. The reason for citing that is because they said UK consumers lost something like 49 million in, I think, 2019 when they banned this. 49 million. Okay, big amount of money, large amount of money, sure.
Mm-hmm.
The CEO of the gambling company Bet365 that same year, just the CEO took home a bonus of 400 million that year. So where are you aiming your regulation at? Rather than have what is with futures, it is a genuine risk management tool. It is a trading tool. It has genuine legitimate value in the space. And to just blanket ban that for anybody who's not got $500,000 or more and can prove they're a professional, and yet there's no problem putting hundreds of pounds a month into Bet365 betting on horses. That's okay. That's protecting the consumer, and it's just a perfect example of people who do not have the markets or the people that they are aiming to serve or supposed to serve and look out for the best interest for. They aren't doing their job.
Right. Exactly. It's like I said, it's starting to smell really bad around the SEC right now. And I don't want to get stuck on this for too long either, because we've already done almost half our time.
well, there's more to talk about with regards to DCG and how the wider implications of that. So
yes, I wanted to get into. There's 2 more articles I just wanted to kind of bring up here, and just so we can have a quick look at it here. So Gemini, who has been in, I don't want to say cahoots with DCG or anything, but what they've done is they've terminated their crypto yield product, right?
So it was so their yield product was ran through Genesis, which is a subsidiary of DCG, and it's Genesis that's blown up, not directly DCG. That's a distinction to make. So Genesis are the ones who held Gemini's customer assets in their yield product, and their yield product has turned bad. They got to say they were involved in Luna, 3AC, FTX. All of this has just caused a big hole in their balance sheet, which DCG has filled. So unfortunately, they filled it with this promissory note, or this essentially backing that yes, we will pay this debt off for you, but Gemini still have 900 million Genesis still have $900 million of Gemini's customer funds locked up, and they can't get access to it.
Where do I send the complaint to why they have to have so similar names? It's hard to remember who's who right now.
It's well,
but yes, so they basically so what happened was earlier. I'm going to bring up a tweet here. Cameron Winklevoss, who is one of the twins. I don't know which one is one. Actually, here, this is the one right here. He posted an open letter to Barry Silbert, who is the the big boss over at
CEO
DCG.
of DCG, isn't he? Yeah.
Yes, correct. And well, he called them out for various things, and it created a little bit of a storm here. And Barry basically said we didn't borrow 1.675 billion from Genesis, and yada yada yada. And we got some responses here, so I will actually put this tweet in the description so people can, or in the chat, so that people can actually read this on their own, because we won't have time to go over this entire thing in this show right now and talk about it all, but it's worth a read. There's been some responses from a guy at Coin Bureau. There's Peter Schiff has responded to this. All these fun people that are always fun to read tweets from. But essentially, they shut this down because I guess they wanted to prove a point too.
Well, they've shut it down because it's in a massive hole, and the people that deposited into it can't redeem their assets.
Precisely.
That's the long and short of it. And yep. as much as the Winklevoss twins, yes, okay, they've fallen victim to a company which has fallen into insolvency. Maybe they need to take a look in the mirror, or maybe just take a look at each other and have a bit of a think about where was their due diligence with Genesis?
Right. It goes both ways, right?
They promised their customers supernatural returns on their crypto investment, and then they gave the money to a company who was responsible for generating this supernatural yield.
Yeah, and now they're trying to say that they didn't do anything wrong. It's kind of ridiculous. Yeah.
I like the phrase in DeFi that if you don't know where the yield is coming from, you're the yield.
Yeah, exactly.
The 2022 has just been a perfect example of people finding out that yes, actually, you're the yield. All of these billions, all of these millions, all of this interest, it was just one big Ponzi. It was just money piled on top of each other, and the last one's out the door. Find that there's nothing left.
So it seems like as soon as you put a bunch of money into a centralized entity, things can go bad really fast.
Can. Ultimately, but it's. Well,
do you think? Just a quick side note. Do you think DeFi will fix a lot of this?
DeFi fixes an awful lot of this, with the caveat that it has to be good DeFi, because there's an awful lot of bad DeFi out there. And I think what we've seen now, though, is we have seen the bad DeFi flushed out. You have really good apps. You have now a select few of really good services, stuff like Aave, where throughout all of this collapse, through all these liquidations, these insolvencies, I haven't heard anything about Aave going down.
No, exactly. It's everything that's all these big dumps that we've seen is because there is one point of failure, which is someone in a centralized place have made a decision, and it's been a bad one. Somebody has trusted another entity with, funds and whatnot. They've taken leverage upon leverage upon leverage upon all these things just to make, I need to make extra money. Come on.
I mean,
use DeFi.
They made some extra money. There's a lot of extra money generated, but who was the yield?
At what cost, right? Yeah. I would never... I would... I mean, obviously, to make money, someone else has to give you money. Or, in this market, trading is if you make profit, someone else is making a loss most of the time, or all the time, actually.
All the time.
But if you, Like that's fair trading. That's an open market, free market. But if you have these problems where you have these massive companies that are entrusted with making sure or promising a bunch of things, like I stay away from it as much as I can. I think this is the whole point with crypto as well, by the way, everybody, to remove the centralized, black holes, basically. Either way, I want to just quickly just mention, because I know you have a whole thing you want to go through, and I want to just show this thing as well. Here we go. DCG also closes down their wealth management business side, which was about 3.5 billion in assets. And it's a very short article, but they shut that down, and that just, for me, that kind of, it says, okay, they can't afford to still do that.
Either we can't afford to, or we can't be bothered anymore.
I'm leaning more towards the fact that they can't really afford to do it anymore, because if it's not making a profit, why would they stop it, right? If it's not making a profit, then there's no point having it.
I don't understand I don't understand how it's not making a profit if it's a wealth management fund. Obviously, the wealth is in there, so it all adds. It all adds up to the reasoning behind why these problems are happening. Is there's a big black hole that the money doesn't exist. So whether or not is it loss making? Are they just bad traders and they're just losing money, and there's something that they're going, right, okay, let's cut it off?
I mean,
we enjoyed the bull market. Everybody made loads of money. We all got rich. Let's just take it and go.
If it's anything like, if you got the same type of people that do the trading within that section of their business, and you put, if it's someone who's like Caroline Ellison, for example, who obviously didn't do well. I mean, no. I'm laughing about. I don't mean to laugh about the fact that she lost all people's money, but the way that she was commenting in interviews about, stop losses being a bad way of trading, for example, and all these weird comments about not doing any safety.
I don't like stop losses when I'm shitcoin trading.
Well, there's a difference: shitcoin trading and managing a whole hedge fund.
No, she was shitcoin trading. That's the entirety of what she was doing, was shitcoin trading. Okay, clearly wasn't very good at it.
Yeah, I'm going to let you take over the screen here, Rob.
I think we covered most of it in terms of sort of the effect on the wider market. But
we can open the charts if you want.
There's one big thing to sort of think about in terms of the GBTC discount, is that so GBTC is currently down here, sort of 98.50. Very cheap. Sounds great. And in fact, if we compare the Bitcoin price versus Coinbase, actually, if I do that, then what we can see is,
you can see this gap. GBTC, right?
Yes, and the orange is the standard Bitcoin price, and you can see the extent that GBTC hit. It hit 38,000 in 2017 when the actual Bitcoin price was 20k, so nearly twice the amount. And since then, we had this period of premium all the way through the previous bear market, and you can see here in sort of Q1, Q2, 2021, that was where it sort of flipped and hit into a discount.
Yeah.
And so what you saw was, we saw people, I know Suzu of 3 Arrows Capital was buying GBTC on the basis of, hell yeah, I want cheap Bitcoin. There's no chance that I could be insolvent because I'm a billionaire. Look at me, I'm a genius trader. And unfortunately, when the market dropped, GBTC continued to fall. This gap continued to grow. And if you just look at the percentage difference from, say, the peak in April, it's down, Bitcoin's down 72%, GBTC down 80%. So,
Yeah.
that's around a 25% loss on top of what Bitcoin has done.
Yeah.
And so, if
That's,
you were taking customer funds in Bitcoin, buying GBTC with it,
yeah.
going, cool, I'm fine, because eventually I'll be able to cash this back out at parity, and I'll make loads of Bitcoin. But the discount continued to fall, and actually, this unlike actual Bitcoin, which was liquid and redeemable, this GBTC wasn't. You couldn't borrow against GBTC because it's it's a locked up fund, and so you suddenly start losing customer money, and
Yeah. It's not
it's
great.
no. Now the problem comes if this gets made into an ETF, is it will, and people will make out that this is a good thing for Bitcoin, and for sure it is in the long term development of the market. Short term, I would I'd hold on to a few things, because what we would expect to see is a return to parity. Yes, like there would be an awful lot of buying of GBTC if it got converted into an ETF. The problem is most of that buying, or a lot of that buying, would be people buying or buying GBTC with Bitcoin that they'd sold, because they would know that the price would come to parity. So they would, if they could buy GBTC at 13, 14k and sell Bitcoin at 20k, well, great, you can buy 50% more Bitcoin, and that would lead to and obviously not saying it's going to be here, but if it was, then that would be probably a big old dump, as this would sit and do this, and we'd end up trading in par.
How much did you say one BTC would cost again? I'm looking at a chart here. I'm actually gonna switch over to mine for a second here.
It's 98.80 currently.
So you would have to pay. Well, let's call it 10k for one Bitcoin.
Yeah.
Right. And if that were to, let's say, just for simplicity, you would meet somewhere halfway. Let's say you would have to meet somewhere around 13k.
Well,
let's just pretend, right?
Yeah.
It's like, not only that, but this is, if the fund is made into a spot ETF, maybe we would see a bit of a crash down for a while, and then from there we would see more, because if Bitcoin is an ETF, there's a lot of incentives for businesses and whatnot to get into institutions. What's the word I was looking for? Sorry, I'm Swedish, don't judge. And that would mean we would have a whole lot more money coming into the space overall, right?
Yes.
Which would be a good thing. However,
yes,
with that said, if this happens and we see like a bit of a dump there, but I don't think we're going to see this happen. Actually,
well,
what I do think might happen though, because the whole point of this was actually to figure out what happens if DCG goes under.
Right? Well, quite frankly, the most likely thing would be they would have to wrap up GBTC, which would involve, which would be a big problem, because although they have one-to-one backing with Bitcoin, they could make it redeemable on a one-to-one basis. In which case, you would see this huge volatility spike, of which would be a Bitcoin drop, as people would want to buy the GBTC before the redemption. Now, they just cut it off in one go and then say, okay, everyone gets one Bitcoin back, see you later. That would be the best thing, but then that takes away their assets, and they've got a 2 billion black hole. Their reliance is on this 2% management fee, so I very much doubt they would wind it up unless they were forced to, in which case they would be selling down Bitcoin at rock bottom prices but they wouldn't be able to buy back the GBTC with it, so they would have to sell a whole load of Bitcoin, push the price down, and then buy the same number of shares of GBTC back. So if they had to dump 100,000 BTC and they bought 100,000 GBTC shares, what we'd probably see is a flippening. GBTC would actually start to trade at a premium again because all the sell liquidity would be sucked from the market by DCG, and they would then have that awkward moment of having to, in order to redeem the Bitcoin, they need to take a hit, and they'd have to take a loss on this. And there may be a point where they would actually become insolvent because their product became too expensive.
Right.
Yeah, it's an awkward moment that we'd have to think about how it works, but there's a worrying sort of scenario where Bitcoin collapses and collapses and collapses, and the more it collapses, the more Bitcoin DCG have to sell.
Yeah.
And the more expensive relative to it GBTC would become.
We've seen all this so many times already.
Yeah.
The whole thing where it's like it's a rolling pin. That's what this whole thing was here. It was just a thing and a thing and the next thing and the next thing. I just marked out just for fun here the golden pockets for the Fibonacci's from here to the top and from here to the top. So if we were to see some kind of downtrend, there would probably be some people wanting to buy around here somewhere. Probably.
Yeah.
I would see some support there. But yeah, that's probably it for today, actually, Rob, because we have gone over time. But hey, thanks everybody for coming to the show, and we will do this again tomorrow, hopefully. Hopefully.
Maybe.
Maybe we'll just be me sitting here doing.
I think it will be
something.
Tomorrow.
Yeah. But yes. So if you enjoy the content, subscribe, like, and hit that notification bell and all that. And join our Discord too. This is where we do all the fun stuff mostly. So
yeah.
We'll see you there. All right.
See you later.
Ooh, wait, I have an outro I can play. I think. Yes. All right. Bye, everybody.
Hey.